The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 8th fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to go piece together what it is they're communicating to you and I at just past 1 o'clock in the afternoon. Most importantly, I want you to know that I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648 internationally, 727-445-1044. Let's get this show started on this fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 47 points, trading out at 17,590. S&P's up 7, trading at 2049. NASDAQ Composite down slightly off a little bit less than a point, trading at 48.47. Russell 2000 up 3 points, 1096. The DAX finished up 92 points. The FTSE finished up 67. Gold's trading up $6. Silver's up 21 pennies. Light sweet crude up $2.46, trading out at 39.72. Lead the charge here to the upside, individual stock-wise. You've got Intuitive Surgical, that's up $7, a little over 1%. Alta Salon, that's up 3%, up $6. CNOOC. Canuck, I guess you would call it, but probably not a Canadian company out there. And ticker symbol, though, is CEO. That's up 4%, up $4. Canadian Pacific Railway, that's up $4. The Duluth Holdings, you know, the guys that have no pinch, no stink out there, they're trading up about 24%. I wonder if that is actually IPO day for Duluth Holdings out here. DLTH is the ticker symbol. No, it's not. Interesting. I didn't know that they were a public company, but since they are, this thing is okay. So the IPO was back here on November 20th, and no pinch, no stink, and nothing getting in the way. We'll check it out. But right now at its all-time high at $22.16. We'll get volume on this chart here and so forth. Lead the charge to the downside. You've got Regeneron Pharmaceuticals off $14, down 3.5%. Intercept Pharmaceuticals, that's off, what is that off? That's off $10, 6%. WD-40. Hey, now that is something that you can use on everything. You know, if they were going to do, probably Saturday Night Live, which, by the way, I think Saturday Night Live basically stinks. I think most of their skits, you and I could write so much better skits than what it is that they put out. Now, the opening, you know, where they have the presidential lookalikes and so forth, that's pretty good. That's pretty fun. But the rest of the show, I got to tell you, I sit there and, I tape it. I can't really stay up that late at night and then try to fast forward it through it on, Sunday morning. And I've just always caught shaking my head like, what the heck is going on? Now, how did I get there? WD-40, I was thinking, because they've got that sequel, My Big Fat Greek Wedding 2, which I haven't seen. I did see the trailer, but the trailer could easily be just the entire funny piece of that movie out there. But instead of Gus spraying Windex, I'd say use WD-40 on everything. It's trading down $7 out here, so maybe we'll check out and see why WD-40 is trading to the downside. Tesla's off about $7. AutoZone down 5. You got the Gap down 14%, might have even gapped down. Let's go see. Did the Gap down here this morning at the open? Oh, a big gap, and probably some pretty decent volume behind the move. But first, you want to know what is going on inside the markets. I will answer it in as simple a way as I can. Sell signals. Sell signals everywhere, across the board. This morning, by the way, the bounce, if you listened into the show yesterday, right, we took a look at what the markets were likely to do, what the message of the markets was. And one of the things that we said, let's just go take a look at the S&P 500. So one of the things that we said here was that the market would finish at or near its, let me turn off those profiles, at or near its session lows. It most certainly fulfilled that prophecy. We also said, hey, while it's doing that, a slight problem out there. The VIX index is trading above a 10% one-day rate of change. So what do we say? I said, do not be surprised to wake up in the morning, look at the futures contract, and see it trading higher out there. So the market is just, I mean, could it possibly be moving truer to form than this? I don't think so. And then today, the perfect, so you had price moving up to different levels of resistance inside of depending on what type of time frame chart you were using out there. And then we've seen a bit of a sell-off here. The market has given us sell signals across the board, up at these sides. Now, as I have said, as I maintain, these are not like a long-term sell signal. I don't know where the retracement in the S&P 500 is headed to. I have some ideas, but if we just really keep it simple, Steve-O out here, they use the old KISS theory, well, that says 1973 is going to be the first target area. Now, you're trading at 2,050, so you're looking at about a 75-point move in the ES Mini. That's how beautiful this last run to the upside was, and it had plenty of strength out there, plenty of, one of the highest advanced decline oscillator reading. In fact, the second highest in time. And markets do not typically end on that, especially during a favorable seasonal cycle. So let's get that S&P rolling, get down to 1973, and it is not. I say it is not out of the question for the S&P to get down to 1911. Now you're talking about a 130-point move, and after a 130-point move, people are going to say it's over. That was the top, and that's where we're going to be looking to get in for the next run higher. The real top, should there be a real top out there, it doesn't likely occur till May, maybe July, something along those lines out there. But we'll just take things one day at a time. But it is nice to be able to have a blueprint, a roadmap, which is really what you and I identified and created yesterday. And today, we're just getting that accurate follow-through to the downside. So pretty nice. You can trade this however it is you see fit, but the markets are trading up towards their highs. Nice time to head to the short side out there. If I take a look at, let's go take a look at these 30-minute charts out here. Here's the ES Mini. If we take a look at it, so you can see that it's got this nice little declining tops. Price was not even strong enough to get up to the top of that level, but we're not going to hold that against the old ES Mini out here. It was able to make a 0.786 retracement of that move up. Likely, that was the C point of an A to B. Its next A to B equals CD to the downside. Well, what do we say? What would that price projection be? Well, your A point would be right out here at about 21:30 in the evening on April the 6th. Your B point down here yesterday afternoon at 1300 hours, or approximately there, and then your nice little retracement into about 10 o'clock this morning. Now, that was about a 0.7, there was a 0.786 retracement. We already said that. So the next move down, probably about 2018, 2008. But in order for the ES Mini to do that, it's got to get below support. And hence, I say support is 20, 40, even Steven out there. That's the key number. Until it does that, we don't have an A to B equals CD to the downside. This is Steve Rhodes with TFN. Having too much fun, I think. But we'll be right back, and we'll keep that fun rolling here at TFNN. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 37, S&P's up 5, NASDAQ Composite down 7. We're going to go to Ormond Beach and speak with Mike. Mike, thanks for calling. Thanks for holding. How are you doing this afternoon?
Great, Steve. Beautiful day out here on the east coast of Florida. I don't know what it's like over on your end, but
well, my end, I'm in the southeast. It's even nicer.
well,
And
anyway,
Clearwater, I'm sure it's got to be great in Clearwater as well. So life is good living in Florida, is it not?
Yes, it sure is, especially having this afternoon off so I could call into your show.
Oh, that's very kind. Now, you are the one that makes those sculptures.
Yes, you talked about one day about how some people can just visualize looking at a pile of junk and turn it into something beautiful. And I called in and I said, "Hey, Steve, I'm one of those guys. Check out my website."
You are. I remember that, which is very, very cool. Now, what you're calling about, though, is really, we can't classify it as junk. It's it's gold junk, I suppose, out there.
Well, I've been watching these gold stocks, a lot of them kind of making double tops on lackluster, very low volume.
Yes.
And I know that you're believing that we're going to get down below 1,200, around to the 1160-ish area. For
1140, is probably 1123, 1140, something like that.
Okay.
I don't have the downside target because I want to see what kind of pattern might form down there. And ideal, it'll be some type of Gartley pattern that forms, as gold moves lower. And I'll be waiting for probably the signal is everybody on CNBC finally giving it up. All the bulls finally packing it in and saying, it's over for the gold run out there. And then, we'll jump all over it. But for the time being, there's nothing in my position that has changed. I haven't seen any information that has changed my view. But your specific question would be?
Well, pretty much, do you think that the dollar will play out its descent into the 92s before we get the big retracement in gold?
I've done studies before. I've done them here live on the air where we've taken a look at correlations. We've taken a look at the U.S. dollar index and gold. And we see that there are plenty of time periods where the two do not correlate. So my outlook on the price of gold has nothing whatsoever to do with the U.S. dollar index.
Okay.
I mean, it's going to do whatever it's going to do, but it has absolutely nothing, to do with the U.S. dollar index. That doesn't mean we can't take a look at it for those, that want to use that as a correlating figure. If I look at the continuous contract, so I can get plenty of other data. Your question was, will it get down to what levels were you looking at?
Well, I'm in agreement with you, and I'm kind of trying to get an idea of when, possibly when it could happen. I know, like a lot of times, Basil uses time and price to get an idea of when a low or a high could take place. And
Basil's got an amazing ability to do that. It's kind of like, do you play golf by any chance, Mike?
No, I don't.
So I used to play a ton of golf, a lot of golf. I loved golf out there. Not that I don't like it now, but I had some rotator cuff issues, and so golf has taken a real back seat. But the point that I want to make is I watch people plumb bob. I've watched all kinds of golfers throughout my golfing career plumb bob, and I have tried and can't figure out what the heck they're looking at. We see what we can see, and Basil has this ability to do this price time match, and I watch what he does. It's like an artist out there, and I can't do that and figure it out. But we do all have these different tools, to help us do that. I don't know what Basil is taking a look at. I think Tom is he looking for the dollar to go down, or I don't recall what his position.
I know he has been looking for the dollar to go down into the 92s.
Yeah, you can easily make the case for that 92s just simply because of a huge consolidation. If you look at the continuous contract, there's no question. Whoops, you got to grab the right tool out here. But there's no question that and it doesn't really matter what the instrument is, but you could easily see, look at 93 or so, 93 and change. It's just been a consolidation that's been in place probably since January of 2015. So a good year plus out there. And you're right. Maybe it has been very frustrating. I will say, it's been very frustrating for gold bulls and gold bears. There is no question about it, and it's so easy to point out. If I put the gold contract up on my screen and we just change this to a monthly chart out here, you're going to see everything has been a heck of a lot about nothing over the past 5-6 weeks now.
Right.
If you look at last month, you had gold, the open and close of gold last month. The open was $12.39 and the close was $12.35. $4? Are you kidding me? And this month here, the open was It was $12.34. You're trading at $12.43, $9. So really, there's not been anything that any bull or bear could really get excited about with regard to gold during the last 5 weeks. Not a darn thing that I can see out there.
Okay. Well,
But I believe. And look, one of the things I look at, there are probably four different tools, Mike, that I have looked at that all confirm that gold has made a top out there. One of those tools is, what is the large commercial traders doing? What is the COT data showing?
Right.
And I got to tell you, the most promising thing from the gold bear perspective was last Tuesday during Janet Yellen's luncheon deal, where gold made a run for its highs. But again, you take a look at the monthly chart, you really see it hasn't done diddly out here. But as it was moving higher and people were saying, okay, this is the run higher out there, the large commercial traders were getting even more net short. They were the ones that were selling into everybody else. I mean, it could not have been more plain out here. And that data comes out at 3:30 today, so I'll look at it sometime over the weekend. And,
great. Thanks for bringing that to us.
Yeah. So the frustration in gold with regard to its direction is out there for everybody. There's nobody can claim anything out here, I think, when it comes to gold over the course of the last 6 weeks out here. But you are right. Many will go ahead and use the mining equities themselves individually as a way to determine what might be going on. If you take a look at Rand Gold Resources, as an example, let's just look at the weekly since we have it. The last high that was made out here the week that began March 14th was 5.5 million shares. You're doing 3.5. You're going to be short of that by 20+% on a daily basis. As you pointed out, it's even more pathetic out here.
Yeah, AEM too is.
Yeah, but you're trading into a swing point, and that swing point, as long as, for example, gold closes GOLD, the ticker, the equity closes above 93.06, there's no reason for it to not hit 96.50. And the overall ETF structure, the GDX out there, it has, as it tested, this might be the test and rejection. So it's dealing with March 17th, that day, 131 million. It's done 28 million shares today. You know, if the bulls were really the ones that were in control, they'd be out celebrating. They'd be popping the corks. It's going to do 45 million shares today. It's not taking out a B point or a consolidation level with any kind of gusto behind it. So I think you're right on. But how long is this going to last with things trading sideways? It'll last as long as the commercial traders want to just keep piling up those net short positions. That's my take. All right, my friend.
All right, I'll just sit back and watch. And I want to thank you again, Steve, for giving me one of the most valuable tools in my toolbox. And that's a couple years ago when you had the webinar of the RSI price divergence.
That's great.
I use that a lot. Thank you.
Happy. And have a great day off. That was Mike in Ormond Beach. Dow's up 33. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You know, great conversation with Mike out there in Ormond Beach. He was mentioning that price relative strength divergent pattern as we went into that break out there, and he was calling about the mining gold and the mining equities. And if we take a look at the GDX specifically, what you'll see today, So we took a look at volume. We know that there's no volume behind the move out here. We take a look at GDX. It's also got that price relative strength divergent pattern. Now, this pattern here won't be, you're going to get a failure at a swing point high before you're going to get a confirmation on this pattern out here. But it is a great and is an ideal pattern to help us identify tops and bottoms. It is the most consistent pattern for identifying all major market tops out there. Most of the bottoms, but not all of them, but most of the bottoms as well. On different time frames, monthly, weekly, daily out there. So it just says, and so I appreciate the kind words that Mike passed on, and glad that I was able. And that's really what it's all about here at TFNN, is it not? I mean, look at all the different great tools that each of us are able to provide to, and our own perspectives with the conviction, because we have used these for so long, and we see those patterns that is out there. And yeah, sometimes it's confusing because some of us may have different viewpoints, but that is what trading is just absolutely positively all about. You got to have buyers and sellers out there. If we were all on one side, it'd be no fun out here. So I know it's nice for everybody to be on the same page, but we don't drink from the same pot of tea out there. And that's the deal. Now, let's go take a look at, what do we want to take a look at? So from a market perspective, I've already shared with you what the market is communicating to Steve-O. You get another confirmation of that if we just take a look at the advanced decline oscillators out here for the New York Stock Exchange. That's the left-hand panel. Right next to the left-hand panel is the NASDAQ composite down below zero, reading there minus 43.31. Inside the Dow, that's negative. You got minus 1.14. So you got across the board, you have that it is the sellers that are in control of the market right now. The little struggle it's been kind of interesting here. The New York Stock Exchange, if you take a look at it, what it hasn't done, the New York Stock Exchange has really been strong out here, but we're not trading the NYSE out here. But take a look at that nice little descending price channel out here, and price poked its head above it. It got down, really just below it for a day. It has really continued to act as super resistance out here. Now it's really just trading sideways, so it's not as if it is bullish, and it is not bullish, but it is behaving. It has been just so darn strong. Look at this reading out here, March the 4th. Let me see, what is it? Let's get the exact day out here. 321. What was it, the high out here? I'm just looking at the bottom oscillator, 329, 329, 329. So on the trading day of, where is it? There we go. March the 3rd out there. Such a high. We have not, I think the only higher reading was like 360 to 380, somewhere around there. If memory serves me correctly, I know that it does. It's just back many, many years ago out here. And markets just do not. They typically, well, we don't have enough readings, right, for me to actually say from a sample size, but I'm just talking about when they get above 150. You have the especially when you have a rising advanced decline oscillator above 150, that it doesn't get any more bullish than it. Of course, look, the markets can do anything, that it wants to. From a technical analysis standpoint, the thing that always sticks most in my mind is in reading Reminiscence of a Stock Operator. Every technician always talks about that book, right? But there are little excerpts from that book that resonate with each of us. And that one thing that really resonated the most was the fact that you had this. For those of you who've read the book, you have. You've got this technician saying, I don't recall what it was they were trading, wheat is going to do this, or corn is going to do this. And he's sitting next to, a trader out there, who asked why. And he said, because that's what the technical patterns show. And, of course, the guy sitting next to him picked up the phone and said, buy X number of bushels or sell X number of contracts, whatever it was. And that certainly went ahead and moved the market out there. So technical trading, technical analysis really helps us to gauge where price is headed to, all different types of things that we can integrate into it. But it's not a perfect science out there. It's an art, that is for sure. But it is the best art, and it is the most fundamental aspect of what stock traders are doing out there with instruments. So in any event, I don't know how I got off on that tangent, but it is not difficult for me to get off on a tangent. Let's get off on the tangents of looking at some of these individual equities inside the market. Let's do that. How about this? I can't get the Duluth, even though it's just an IPO out here, right, from not too long ago. You ever see those commercials Oh, somebody asked me the question, do I, because I mentioned Saturday Night Live, I really don't care much for the Saturday Night Live skits that they have out there. And someone said, did I like the old Saturday Night Live? Are you kidding me? Those were the greatest, right? If the current shows could only be 25% as good, just 25% as good as the old ones, we'd have a lot of humor in our life, which we all need a bit of humor in our life out there, but they're just simply not. But you talk about you had Belushi, Aykroyd, Martin. I mean, all of the, Chevy, just really great. And you got to have comedy in your life. And so tonight I'm going to have a little comedy, going to see Lewis Black. And I've seen him a couple of times. Always a funny character. He always brings different political viewpoints and other stuff. And he is generally, and it's great to see him have done so well, right? He plays all these different characters, the voice behind different characters and some of the kids' things and things of that sort. I've seen him on some of the other PGA commercial, right? He's the voice behind the scoreboard out there that is talking away. And just really, if you've never seen him, in concert, where obviously they can, they really have at it. He is just super funny. So hopefully it's going to be a funny show tonight. At least that's what I'm preparing for. But Duluth, Minnesota, not Duluth. I assume that Duluth Holdings is from Duluth, Minnesota, and I'm assuming that this is, the Duluth Holdings is in fact the. It may not be. We should probably look at it. We should probably look it up. But where I was going with that, those of you who've seen that commercial, right? The Duluth underwear. I know I'm giving you TMI, too much information out there. But for those of you that have seen that commercial, what was I going to go with that? I'm trying to do two things at once. DLTH. It's always very dangerous. Well, we're going to see if these guys are the underwear. I want to see what's the company profile out here. What do these guys do? Yeah, clothing. Duluth Holdings markets clothing, tools, and accessories under Duluth trading brands. But it's so funny. I think the commercial's funny, but it doesn't apply to. I'm kind of like, I don't totally get it. The no stink, no pinch, no something or else, and I'm like, I guess I'm okay with what it is that I've got on out there. So it's kind of funny, but it doesn't make me say I got to go out and buy me a set of those things. In any event, okay, probably too much information. Now, where's this equity going to? No way to know. Here's what we do know, that today, whatever it is that they've done, they've got big volume and accelerated, they've got wide price spread, accelerated volume, because the swing point that it was dealing with was March 22nd, 303,000 shares. You've done 634. So that gives you, an A to B equals CD, most certainly to the upside. If we take a look at just the small one that is out here, that would go ahead and give us a price projection of X, that X being, it'd probably be down here as your A point, right around February 28th, your B point. Oh, we got the music. I'm being pulled off stage here. But not before I tell you the price target. I got to say 25.42, not 23.62. The 1-to-1 A to B equals CD. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 52, S&P's up 7. Let's go take a look at light sweet crude, Texas T, black gold out here, trading out at 39.33, up a couple of bucks. You know, this is also a commodity. Now, we do know that directionally speaking, you have a correlation, about a 75% these days correlation on a daily basis between the direction closing of the S&P 500 and the direction closing of light sweet crude. If we do take a look at it, you know, it also really hasn't done a ton over the past couple of months out here. I mean, if you take a look at the last month, you know, the close was 38.34. You're trading at 39.30 out here. You know, even if you take a look at the last 4 months, you know, it basically from open to close out here. Really, if you take a look at open to close and you go back to the January, so if we go just to January, basically you've got an open at 40.96. You're at 39.29 right now, right? So you've got an entire movement of 30.29.75. I mean, a buck, something like that. I mean, you just don't have much. You don't have a ton to hang your hat on. Now, if we go take a look at the daily contract, and I just heard during the commercial break that John Logan is going to be doing a workshop out there, and folks, you know, I can tell you what an extraordinary tool to be able to add to your trading arsenal out here is understanding these horizontal levels of support and resistance out here. I mean, they are just they're invisible to the naked eye until they're on a chart out here, and they just are just so helpful in a guide in what it is you're doing. Now, look, they're not going to be the tools. Well, first, you can trade around them, depending on the size of the box that's out there. They're not going to necessarily be the tool to be used as an ultimate leading indicator. Sometimes they can, but not really always out here. But boy, just a great tool. So you really should come on over and you should sign up for that workshop, and you should download the scanner and see how that works out here. You know, when I'm assisting you and helping identify where price is headed to, how I also rely on these tools. They just have so many really wonderful uses out here. And I just, if you are an active, if you are doing this game on your own, this is a tool you've got to have. There are some tools out there you can take it or leave it. This is a tool that you've got to have. Candlestick charting, understanding the proper bullish and bearish signals out there. That's an absolute must. For your trade investing. So come on over to the homepage of TFNN. I think we've got a number of workshops. I know Basil just finished one. But I think I saw an email, and Andy Hecht has got one. So there's another great workshop. These TAS market tools. So if we look at light sweet crude, what this is communicating to you and I right now is that what light sweet crude has done today. Let me turn off the weeklies, right? Let's just kind of minimize some of the activity out here. It just gives you the better overall picture of what's going on. You've got price that ran right into resistance here during the day. 39.65 is that level. You're at 39.28. We say it's resistance, and we say it's pretty stiff resistance. Why? If we turn off price, we take a look at the current profile, you can clearly see that point of control, this POC, is closer to resistance. That's the top of the box. It says top D, top dog, top for the daily of the box in that panel of mine, that little window out there. And you can see you got 38.67, the point of control, and 36.22 being the level of support. So we know that sellers, with regard to light sweet crude, they're camped out at this. They think that selling between 39.65 and 38.67 is really the best thing to do. So we can get a real feel for, before you when you turn on price and you see what it's doing, you can really say, okay, this is what's going on. Now, what does that mean? If, in fact, light sweet crude, right, because levels of support and resistance get taken out all the time, right? And so this helps us to determine, okay, so what is it that you do now, right? Doing what you know and knowing what to do are two completely different things out there. And in this case here, it really makes it easy, because once you get above a level of resistance, and we're not talking by a penny or two out here, I don't know what the percentage is, but you'll visually be able to see it. Maybe you can use volumes, things of that sort. But when you get above a level of resistance, it's just very simple. It says that old resistance should act as new support. So if, in fact, light sweet crude closes above, before another daily profile exists out here above 39.65, we put the weekly back up here. Well, I'm going to put the weekly profiles. That would say to us that light sweet crude, again, another tool, would likely trade up into the 41.31 level out there. Now, weekly is stronger than the daily. So if we now come back over to these boxes, and you can see here, we'll leave both the daily and the weekly. If you were to say, look, what's the message of the weekly charts out here? The weekly says that point of control is closer to what? Closer to support, not closer to resistance. So that's going to tell you, if you are intraday trading, you want to understand what's going on with these daily profiles, right? So if you're trading some of these triple ETFs, boy, what a great tool to be able to assist you with what the markets are going to do, when to add to, when to floor it, right? When to add to the position, when to maybe take some off, depending on your risk tolerance out here. But once this gets above 39.65, 41.31, and I'd have to say 41.31 is very likely still in the cards out there. Now, here's the bearish side of light sweet crude. You can see that the weekly profile that began back here. This is a daily chart we're still looking at. So it began March 28th. I put this on the weekly chart. Does that happen to be this week or last week? I don't know. Last week, okay? So it's been in existence for 2 weeks out here, so it's relatively new. But that new profile formed below the prior profile. Prior profile. And that then has a bearish type connotation out here. So I would have to say 41.31 is more likely than not, that's what's in the cards here for light sweet crude. So what does that say about the turn of the market and the directional correlation that's out there? It's going to be like the turn in gold. It's probably going to be a little bit of a slow run out here. But the message, the signals, as of 1:49 in the afternoon, they're as clear as bell for me out here. The holdout was the NDX 100, the NASDAQ composite. And in their case, they finally have succumbed to the pressure. They're trading down below another invisible level of resistance out here, and it is now the sellers that have the opportunity to show us what it is that they are made up of. And I think they're going to show us that they're made up of some pretty good stuff to give us that opportunity to buy back in on a nice pattern inside of the marketplace. Let's go take a look at some other individual stocks, for goodness sakes. We've only looked at one of them. Let's go look at CP out here, Canadian Pacific Railway. That's up $4. That's about 3 3/10%. I don't see any emails requesting any information out there. Of course, I probably should go to the correct box out here. Oh, I do have one. I see. Boy, I'm glad that I noticed. And this comes from Bib, I believe. Maybe it's Bob. But let's do this. Canadian Pacific Railway. And then we'll go take a look at the BIB. The BIB when we get back. Canadian Pacific Railway, right now, hey, we know we've got that nice little TAS market profile. The top, look at that box out here. That daily box is in possession of who? The Bulls. This says CP, Canadian Pacific Railway, likely headed to resistance at 135.58. It's moving into a prior swing point that had 803,000 shares and then 977 with lighter volume. So that may be pretty good resistance for Canadian Pacific Railway. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year US dollar denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's up 62 points. S&P is up 8. And Jordan Spieth. Thank you, Terry D. He is now 8 under par. Is he leading, Terry? Is that the low score of the Masters? I'll get into the Masters probably fairly big time on Saturday. And hey, there is no better Sunday than of all the days to sit around and watch a golf tournament. Sunday would be it. The next best Sunday would be the U.S. Open, which is on Father's Day on Sunday. Now, if we take a look at this, is for a fellow listener out here. He wants to take a look at BIB. That happens to be the ProShares Ultra NASDAQ Biotech. So this is the bull side of the IBB. The IBB would be the one-time position. I believe the ProShares is the 2 times, and the Ultra Pro would be the triple, even if they do have that out here. So as we take a look at this, he is long, BIB. We can see right now that a brand new market profile formed today. So that says that you've got and it looks to me like that is a seller's profile, right? Let's do this. Let's just to confirm that. Edit. There we go. I can turn off price. Now, when I say a seller's profile, yeah, because the old, what's interesting here is the old resistance level, the old high is now the point of control out here. That's at 44.20. It's actually not even. It's not a buyer or seller's profile. This is total fair auction because it's right dead smack in the middle out there. Okay, so we at least have that. You're still trading up towards resistance. If you are long, which in this case this listener is, 49.60 is the number you're looking for this to be able to get above. Now, if this were to close above 49.60. Let's say on Monday or Tuesday, you'd actually have one of those Japanese candlestick patterns referred to as the rising 3. Most Japanese candlesticks are reversal patterns out here. They're either reversal, they are patterns that are tired, or they're just quite frankly irrelevant but fun, kooky sometimes names out there. In this case here, because price is trading within this large, wide-bodied candle, the body of price out here, these last 2 trading sessions, if you were to get a close above that level, that would be a continuation pattern. Then that would say we would just take a look at price probably running up, not probably, would run up to 54.48. You could take that to the bank. I wish you could take that to the bank, but that would be your price. That would be your price. That would be your price estimate. There we go, as to where price would likely head to. Now, volume-wise, it moved higher 2 days ago, about 2 million shares. Nice volume yesterday, 2.3 million shares. Backing off today with 1 million shares. So, and where could it back off to? 44.20. You don't want to see this. I don't know where you're long at, but it's probably a price somewhere where I'm going to say you don't want to see this close below, certainly the swing points out there in that $35 type area. That is, do I see anything else out here with regard to this equity? I really don't. If I were going to throw out another number out here, it's probably right around 42.20. You get below 42.20, and that probably says you're going to go all the way back down to 38.89 out there. So I hope that assists you with ticker symbol BIB out there. So what do you want to do here in the last hour? That means I was going to take over for David White, and I would never do that because I want to listen to what David White has to say. But here's what I say. I say at this stage here, you got sell signals all over the place across the board in the U.S. markets out here. You got the VIX index right now trading at 1542. Its next target's going to be 1735, and then 1860 out there. And if it gets above 1860, probably that 0.618 retracement level that we began the show off with inside the S&P 500 becomes the target. Folks, have a fantastic weekend. I look forward to seeing you next week, although I may have to skip out on Monday. I apologize for that. Something just came up, but I'll certainly be here on Terrific Tuesday. Have a great weekend, and we'll see you soon. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.